Um, I am Erin Swenlin from DecisionPoint.com, and today I'm going to talk about timing your trade entries and exits. This is actually something somewhat new for me. I haven't been a short-term trader until about 2 years ago. And as I've started to do more short-term trades, I realized that I really wanted a way to time how I get in and out of a stock, just so I can eke out that extra 0.5% or 1%, depending on what's going on in the trading day in the stock. And using this method that I'm going to show you, it should improve that. It has improved it for me, and most of my subscribers also agree, and it's not very hard. I'm definitely going to be teaching today. So let's go right on to it. A little bit about myself. I am educated. I came up into this business through education, not through a trade desk. I think that's just as good as anything else. I didn't manage money, but I managed my own, and I have learned a lot over the years. I was mentored by my father, Carl Swenlin, for many years, and so he's given me quite the background. But I do have a bachelor's in mathematics from the University of Southern California, fight on for those USC grads out there. I also have a master's degree in information resource management at the Air Force Institute of Technology. And I have been studying the markets for well over 22 years. Probably that's now about 24 since I did this. DecisionPoint.com is where it's at for me. I'm the vice president and senior technical analyst there with my father, Carl Swenlin. He is president and chief technical analyst. And I am often seen on StockCharts.com and StockCharts TV. I'm a consulting senior technical analyst for over 11 years with StockCharts.com. You'll find me on the Decision Point show and Chartwise Women, both of which you can get on YouTube, or I highly recommend you try out the StockCharts TV app. You can put it on your Roku, your Apple TV, and watch on a big screen. So I think that they have something pretty special going on there. All right, so let's dive in. What are the components needed for my system, if you will? First of all, of course, price. We have to have price on a chart. I follow trend and condition. So the trend being whether it's trending higher, trending lower. Condition meaning, is it overbought? Is it oversold? Does it have momentum? Does it have good volume trends? And what about relative strength as far as price goes? And internal strength as far as using stochastics, which I'll talk about shortly. So which charts to follow? So a lot of people ask me, well, what is long-term? What's the long-term? What's the intermediate term as far as trades go? So this is kind of my rule of thumb. Of course, it's not textbook. It's just how I look at it. But for long-term investing, you want to start with a monthly chart, move to a weekly chart, and then look at daily charts. Now, admittedly, I tend to look at a daily chart first, mainly because I do most of my scans using daily data. But when I'm looking at investing long-term, I want to make sure that my monthly chart looks pretty healthy, not only my weekly chart. So intermediate term investing, we're talking about looking at weekly charts, moving down to daily charts. A lot of what I do in the DP Diamonds report, where I give 10 plus stock picks per week, I do show the weekly charts on all of the picks that I do make, in addition to the daily charts, because you do want to have an idea. Is this more of a short-term investment, or is this more of an intermediate-term investment? For example, if the daily chart looks good, but then you go to a weekly chart, doesn't look so healthy, then you can kind of consider it more of a short-term trade. And I have it in bold because that's really what we're going to talk about mostly today. We're going to look at daily charts down to minute charts, and that is a short-term trading horizon. Of course, there is day trading. I don't do that, but honestly, the minute charts that I use can be used for that particular time frame. It's just not it's not in my wheelhouse, if you will. And then we want to time those entries and exits with minute charts. So regardless of your time frame, regardless whether you're a day trader, we're looking at a long-term investment. Once you decide based on those monthly, weekly charts, daily chart, any of these, once you decide you want to get into a trade, this is where timing those entries means something. And then when it's time to get out of a trade, once you've decided it's not going my way, momentum is being lost, then you can also time your exits on those minute charts. So for me, these are the important indicators that I use. The price momentum oscillator, the PMO, this is a decision point creation. It is very similar to the MACD, particularly the PPO. So it's very similar. The calculations are just slightly different. But since we developed this, I find it to be the most helpful, and it's especially helpful on those 5-minute charts. A PMO can be used on any time frame chart, and it still gives you good information that you can trade with. Next is the RSI, Relative Strength Index. This is going to tell you whether price itself is overbought or oversold. Is it traversing in the upper half of its 2-week range, or is it traversing in the bottom part of its 2-week range? That's going to tell you whether price is overbought or oversold. On balance volume, I always like to pay attention to the volume trends. I use on balance volume mainly because it's just an easy to understand indicator. I try and keep everything easy, not only for my subscribers, but really for myself. On balance volume, I love it because it's really easy to understand, and I'll explain that very shortly. Stochastics is something I use to measure internal strength in the shorter term. I'm kind of new to using stochastics. I've always been familiar with them. But again, once I moved my time horizon to a shorter term, I find stochastics to be very, very helpful on those short-term moves. They really give you some insight into the internal strength of that particular stock. And then I do relative strength analysis, not to be confused with the relative strength index. The relative strength index is not what we say is relative strength. We always talk about the RSI. Everybody's like, well, isn't it relative strength? No, relative strength in this regard is we're determining how is it looking relative to the S&P. How does it look relative to its industry group? So that's what I mean by relative strength analysis here. This is just telling you the relative strength of that particular stock. All right, so let's look at a chart and kind of go over each of these components. I want to do this somewhat in detail because I think a lot of us use these, but don't really have a way to visualize what what you're really looking at here. So I'm using a candlestick chart. I've started using those more. They are very, very short term in what they tell you, the candlesticks. Basically, when you get a candlestick, you're going to see whatever it's telling you, whether it's a bearish engulfing, whether it's a doji, whatever it is, it's telling you what might happen the next day. Not for the next 5 days or 1 week. It's pretty much for the next day. So candlesticks themselves, I didn't mention that, but they can be very helpful as well. So we're looking at a pharmaceutical company here. This was mentioned to my subscribers yesterday. It wasn't an actual pick, but I always present the kind of the runners up when I do my report. I'll focus in on 3 to 4, maybe 5 of the stocks. And then I look at, I put out there the short list is what I call it, not shorting, but my short list. Basically, here's the group that didn't make it to the spotlight, if you will, but it's on there so that you can review it yourself, because I thought it was good enough to select from. And this was one of them. I wish I had picked it yesterday, given the move that it's had today. But let's look at these chart components. So first of all, price, candlesticks, as I said. I also use what I call my key moving averages, and that is a 5-day EMA, which is in pink, the 20-day EMA, which is in green, the 50-day in purple, and the 200-day in blue, dark blue. Now, I didn't talk about the setup of the moving averages. I'm going to kind of skip that, but we look at our trend models will determine whether we're getting buy signals, neutral signals, or sell signals just by looking at the mechanical crossovers. So at this point, what I would point out as far as price goes, just looking at the moving averages and looking at price, this stock is in a bear market right now, okay? Because part of the reason would be, of course, it's a 20% decline, but the other is that the 50-day EMA has a lot of margin between it and the 200-day, and the 50-day is below the 200. So what does this tell us? Well, we immediately have to start thinking in bear market rules. And that's a whole nother subject that I've done previously. I also contributed an article on bear market rules. But basically, you need to be careful about chart patterns and oversold conditions in a bear market. Those conditions are not necessarily going to play out as it would in a bull market. So we're not talking just about the overall market. We're talking about the stocks in general as well. So this one is in a bear market, so we have to be a little bit careful about our selection here. But I want to make sure all of my indicators are lined up. So the next thing I'm going to talk about is that relative strength index. And it's really not that hard to visualize what's going on here. So basically, it takes the range, the 2-week range, prior 2-week range, and then it plots where price is in relationship to that 2-week range. So we want it to be positive. We want it to be in that upper half of that trading range. And the RSI, when it moves above 50, that's what it's telling us. So I like to see an RSI that is positive, where it's moving above 50. Once it gets above 70, we don't have too many examples here, but we had one back here. Once it gets above 70, that means your price is overbought, and it's now kind of subject to the possible decline. And as you can see, just off the RSI, we saw that we were going to get a price decline. It was overbought, started to head back down. And sure enough, that's when we started to see that decline. So, I mean, just the RSI can be very helpful in just determining whether you have a strong chart or not, whether price is overbought or oversold. That's what we're talking about here. The price momentum oscillator is basically measuring acceleration. And like I said, it's very similar to the MACD and the PPO. And the idea behind all three of those is the same. This is measuring acceleration. So I always think of the PMO as being where my foot is on the accelerator, if you will. So when the PMO is rising, that means you're putting your foot down on the accelerator. And so you're going to go faster. You're going to see price rising. When you reach speed, if you will, then you hold your foot just right. You don't move it up. You don't move it down. You're just going to cruise, right? So then that's when the PMO starts to flatten out. When the PMO is moving downward, that means you just are physically pulling away from the accelerator and in addition, probably applying the brakes somewhat. So just imagine this as your accelerator. We want the foot on the accelerator pushing up so that we are getting a good move on price. Here's an example of why in a bear market you have to be careful. This looked like a really good basing pattern here. And you can see just with that candlestick, we had the breakout above that 20-day EMA. So all of that was starting to look good, but our RSI was still negative. And even though the PMO was rising, it was kind of flat. It wasn't really like one of these crossovers where it's pretty obvious, a clean crossover. And right now we do have what I would call a clean crossover because it's moving upward pretty quickly. So we know right now on fold that the accelerator is being pushed downward. So that tells me that more than likely we're going to see price continue higher. It's a little bit subject to overhead resistance. We have the 50-day EMA here. We have this level of overhead resistance at this price low and these price tops. So there's some resistance coming up that fold is going to have to deal with. But let's look under the hood a little bit more. So on balance volume, I'm not thrilled, honestly, with the pattern that I'm seeing right here. We've got this really big push to the upside, but we really didn't see the OBV make a huge push to the upside. So that would be I wouldn't call it a major negative here, but it's just something to keep in mind that volume isn't quite behind this move like we would want to see it. Then we look at stochastics. And remember, I told you this is a measure of internal strength. I'm not going to go into the calculations for stochastics. It is a bit more complicated. And I don't think you really need to be that familiar with the formula, if you will. Oh, I meant to tell you about the OBV so that you can visualize this, right? So the OBV is really a simple volume indicator. When price moves up, you take the volume for that day and add it to the OBV line. When you have a down day, you subtract the volume from the OBV line. So you can see right here where we had this big dip, very high volume, and notice the OBV just fell out of bed because high volume on a negative day. So that's pretty much what your volume trends are looking at. You really want to see positive divergences. You want to see volume coming in a little bit stronger on this rally. I mean, we can see here just looking at those volume bars that it's not, we're still getting volume in here. Stochastics, as I said, this is going to measure your internal strength. What we want to see on stochastics, it's a little different than the RSI. We actually want the stochastics to look, quote unquote, overbought. We want stochastics to be above 80, and we want stochastics to stay above 80. We want to see them rising and get into positive territory above this net neutral, as we call it, 50. So we want to see it in positive territory, but it's actually a good thing to see it, quote unquote, overbought, if you will, sitting above 80. Notice back here, it was above 80 almost this entire time, and you were in a nice rising trend that entire time. So that's why we want to see those stochastics above 80. And this one is heading that direction. So that looks good. Now we want to think about relative strength. And I like to kind of dive in a little bit deeper. Most people are going to look at the relative strength of the stock against the S&P. That's great. I still think this is the most important window of all of the relative strength analysis here. You do want a stock that's outperforming the S&P. I mean, that's the benchmark. That's what we're all searching for. But I like to get a little bit more in the weeds, maybe. We're going to look also at relative strength of its industry group against the S&P. Is the industry group outperforming? If it is, that gives us another level of confidence that this particular stock should do well. And you can see pharmaceuticals are showing a lot of relative strength right now against the S&P. This stock is showing great movement against the S&P. This is the other one that people may not be familiar with, but I also like to look at the relative strength of the stock against the group. Is this outperforming its group? The group is outperforming, that's great, but it'd be nice if I could find the stocks that are outperforming not only the S&P, but the group itself, especially if the group is doing well. This one wasn't doing that well against its group back in here, but now we can see it is starting to outperform not only the S&P, but also outperform its industry group. So that really sets us up pretty well. So that's the daily chart. So this is what I'm primarily going to use to determine whether I want a stock or not want a stock. I kind of look at the positives, negatives on that chart, and then I present the chart. So for example, I would consider this a diamond in the rough, if you will. That's what I talk about in my DP Diamonds report. I'm pulling out these diamonds in the rough stock picks that could shine up and sparkle, but they might not shine up and sparkle. They're in the rough. So we don't know if underneath there's actually a shiny diamond. So we look at those diamonds in the rough. And I would say this one suits, would be that kind of a stock pick. All right. But now we want to talk about entries and exits. So now we've decided, do we want the stock or do we not want the stock? So now the important thing is getting in at the right time and getting out at the right time when we have a stock. So what I do is I use the same indicators, almost all of them. I don't do the relative strength. You'll see. I use the same thresholds, and you'll see what I mean about that. And then I do use minute charts, but I only use them for entries and exits you can use them past that if you wish, but for me, the daily chart tells me whether I want to be in, whether I don't want to be in. The minute charts are really just to help me time the best time to get into that stock and the best time to get out of that stock. So I use for my entries a 5-minute candlestick. And then also for my exits, I use a 5-minute candlestick. Now you can use the 15-minute, the 30-minute. You can use that on entries and exits. I just find that especially for entries, that the 5-minute works very well. For exits, I like to use that 5-minute candlestick as well. But I think most minute charts will give you the information you need on an exit. That's not quite as particular as far as what we look for. So let's look at one of these charts so you can see what I'm talking about. All right, so here is a 5-minute candlestick of that exact same stock that we just looked at. So what is considered a good entry? So I talk about conservative and aggressive entries. So a conservative entry, the entry that you're, looking for, and again, for conservative traders, I'm kind of in that boat. I rarely will take an aggressive entry or an exit, but let's start with what is a conservative entry or exit. We want to see a positive PMO crossover in conjunction with a positive RSI. When those two things line up, so back here you can see we got that crossover, but the RSI wasn't quite positive yet. We had to wait just a little bit longer, 5-10 minutes more. And then we had the buy signal intact and we had a positive RSI. So that would have given us an entry somewhere in this area. We would have missed out on this, but that's okay. I came in and this still, it's a pretty good entry. It's coming off of a rising trend. We're just saying I didn't know what was going to go on here. So that would have been my entry and I would have been very pleased with that. Now, if you're day trading, you can use this, but like I said, I'm not much of a day trader. It just doesn't suit my style, but you could certainly use this. I would say if you're going to day trade, you can use the same system, the positive PMO crossover with a positive RSI on a 1-minute chart. And you would probably have just as much success with a day trade using this system as far as these indicators, but using it on an even smaller level, a 1-minute chart for day trading. So there is your conservative entry, the PMO crossover and positive RSI, which would have gotten you in here. Now, an aggressive entry might be here, where you've got the PMO has started to turn up. We don't have the crossover. The RSI is rising, but it's not positive. So that could have been a more aggressive entry, which would have gotten you in a little bit earlier on this. But the problem I find with aggressive entries is that a lot of times price fails. It's better just to wait for all of the indicators to be kind of lined up. That's why I call it a conservative entry, but I think it's the more successful of the entries typically. All right, so when do you exit? Honestly, the exits are pretty easy. Once you determine, the hard part, right, is looking at a daily chart and determining whether you don't want it anymore. That's always difficult, but we'll talk about that a little bit when we look at some of your symbol requests. So the exits are really just when that PMO turns over. So you can see back here, honestly, was a exit, which would have gotten you out right here on that pullback. Or here you have the PMO turning and even getting a crossover sell. But again, when I want to leave a stock, I just need any excuse. And a PMO turning over is always a good excuse to sell. So that's what I've decided to use as an exit rather than wait for more to gel. I don't need to wait for the RSI to get negative. I don't need to wait for a negative crossover. I just want to see momentum failing and then I'm out. Okay, so you can see here we ended up with another buy signal coming in. I don't know exactly how this one ended today in trading, but this suggests that we are going to see a move even higher unfold in the short term. So those are your conservative entries and exits. And you'll see that it can be an art. It's not always an easy thing. All right, so let's go look at your symbol request. But before I do that, I do want to make mention that I do have a free live trading room. So if you go to decisionpoint.com, you'll see my picture. And if you click on my picture, you can register for this free trading room. It's every Monday. Let's go back. I don't want to share that just yet. It's every Monday from noon to 1 Eastern. It's basically, I do real time, what I just explained. I look at symbol requests like I'm going to do next, and we look at entries and we look at exits. And I start with a market overview, and then we get right on into those symbol requests. It's also going to get you signed up for that free newsletter, and you'll get on Mondays. I only send out one per week. I know everybody's mailboxes get crazy. I only send once per week to my free newsletter subscribers on Mondays, and it includes not only just sort of a synopsis of what I'm expecting for the week, but it also talks about it brings in all of the free material that I've presented over the previous week. So you get a link to my Decision Point show. You get a link to Chartwise Women. You get a link to any free articles I've written anywhere or that Carl has written anywhere. So you'll get opportunities like we had for this, where you can sign up and go to special presentations that I do. But I think you'll really enjoy the free trading room. Go right now if you want to decisionpoint.com, click on my picture, and it's recurring, so you only have to register once. If you decide you don't want to be involved in it anymore, you can opt out through Zoom. All right, so let's get on with it and see what we can see. So when I do my trading room, I set up my daily chart on the left and my 5-minute chart on the right. Now, if there are any stock chart subscribers out there and you would like to have these chart styles, you know, where it has the indicators on it that I use, basically look just like this, and then you can use that for your dailies. And then I can also send you the chart style for my 5-minute if you're interested in that. A lot of people ask me, well, how do you get them side by side? I don't understand. It's actually quite easy. You just create a tab on your browser and pull it out. And now you have, and now you have a new window, and you can, you know, log in and do it that way. All right. Where did my, all right, well, we'll just get logged back in here. Oops, gold. Well, that's one we could look at. All right. Okay, so let's go ahead. I'm going to look at the chat. Yes, so Kathy, I just explained, okay, would the PMO be like the ATR? No, the PMO is really, it's more like the MACD and the PPO. It's just measuring momentum. It's not an average true range. Stock charts, yes, it gives all these indicators. You can try these for free, but if you want these chart styles and setting it up this way, you know, you do have to be a Stock Charts member. If you are on my website and you subscribe to any of my publications, you don't need to be a Stock Chart subscriber to see the charts. So that's just have I looked at effectiveness of shortening the parameters of the PMO? Yes, actually, I have done, you know, more of a MACD setup on the parameters for the PMO. But in all honesty, I kind of prefer, this is what we developed it for, was this these parameters. So I kind of go with the default, but I have to say, you can change this, and the PMO, I think, is every bit as successful. I just prefer to use the defaults. Okay, let's see whether anything else in here. Uh-oh, you didn't see anything, hopefully. Okay, so yeah, the overviews on Mondays. Oh, Eric, welcome. Nice to see you in here. Okay, so let's look at a few symbol requests. I only see one right now, so go ahead and pop those into the chat. Just remember, when you send anything in the chat, you always have to send it to everyone if you want everyone to see it, but you can just send it to us right now. Okay, good. Now we've got a few. Let's start with a Canadian stock here. So this is exactly what I will do in my trading room. So I'm going to pull up these symbols and then we talk about them. Okay, so right now, when I look at this particular chart, I really like the breakout here. This is a nice basing pattern here, that nice rounded bottom. And then look at the PMO. The PMO is on a buy signal. The RSI is positive and not above 70, which would make it overbought, and it's rising. So that is in line. This is in line with that breakout. Here, I'll put my little inspect tool on here. So you can see right here, there's the breakout and the close above that area of overhead resistance. And we've got a nice looking PMO crossover here, and the PMO is rising. I like that. And then notice we also have the OBV rising. And now I want to take this out. So we have the OBV on a rising trend, which is confirming the rising trend on price. But then the other thing I like to see is the OBV. Whoops, excuse me. I like to see the OBV make new highs as price makes new highs, because that tells you that the volume is really behind the move. So that looks great. I don't have the relative strength here of the industry and the symbol to the industry because of the fact it's a Canadian stock, and Stock Charts doesn't offer that. But when we look at it against the S&P, look at this really nice rising trend. It's really outperforming. So I have to say, I really like this stock. So now what do? How do we figure out when to get in? So I'm going to put my little inspect tool on here. We could see that one of the last buy signals came in right here on that crossover with the positive RSI. So the last buy point came in right around, you can see the close up there in that little box, 68.78. So we know that's pretty much the last buy point that we had. Well, currently, of course, price is trading above that. I like seeing it hold this level here, though, from yesterday's high there. That's very nice. So sell point would have come in back here. So if you had looked at it and you decided, well, I'm going to take my profits, the sell point would be right here when the PMO turns over. And so that would get you out right about here. Over here, you can see we had the PMO flattened, but we never saw it rise. You can see the PMO flattened, never really rose, and then it topped beneath the signal line. That's a bad sign. But the fact it held this support is a pretty good thing. And then we see the PMO came back up. Doesn't look like we got the crossover here. I can't really tell, but I would say now we've gotten the next buy point, because there you go. There's the PMO crossover with the positive RSI. So the buy point, this last buy point that came in, was at 69.08. So one of the things you could do is set a price alert that when price is right around 69.08, you want to buy it. Or you could put in a limit order. Just be careful with those, because we know how the market can open crazily. We just never know what's going to happen with that. But you could set a limit order for that for the next day. I like the way this is kind of bottoming with more of a double bottom shape. I think that's positive. So we should likely see the breakout and a move that might come up here to test overhead resistance. So that would be your buy point that just came in. This would be your sell point right up here. The last buy point, the earlier buy point this morning, came in right about here on that bar. So that's how you would time your entry and your exit using the 5-minute chart on this one. But I do like that daily chart. I think that looks pretty healthy right now. All right, UVXY. I think this is one of those, yeah, ETFs. Okay, so you can still apply the same rules here on one of these ETFs. This is, a juiced ETF on the VIX. I play those now and then, but typically I kind of just rotate into the areas I like. Looking at this right now, just on with a technical standpoint, I don't like it, to be honest. You do have that positive RSI, but it is falling. You have a bearish engulfing candlestick, basically the body of this filled red candle covers the body of the candlestick prior, and that tells you to expect another move downward. The PMO is topping, don't like that. Stochastics were above 80, but now they're topping and moving down. So we're losing internal strength on this particular trading vehicle. Yes, it's been doing very well against the SPY, but the VIX is rising right now and the SPY hasn't been doing that. So that makes sense. We looked at the 5-minute chart for this. And again, I'm not really into an entry here. So let's just say you have it and you're wondering if you should sell it or you're ready to sell it. Your sell point came in this morning right here when the PMO turned over, which would have gotten you out right about there. You wouldn't have had to experience all of this. You could also have gotten out here where the PMO topped in there. So that would have gotten you out there. When it topped beneath its signal line, that's an especially bearish signal. So that would have gotten you out about here. So there were plenty of opportunities to get out before you had to suck up this big decline. Buy points, we don't have one. Yes, we have that PMO crossing over, but that RSI is pretty negative. So I wouldn't have been a buyer at this point because of that RSI. And sure enough, that we ended up with the failure. This is why, aggressive buy points, I get it. But typically, you need to lower your confidence level on those working out. PMO is now topped again, which would have gotten you out right on that second candlestick, maybe that candlestick as well. So not liking it. We'll check the next one, Schlumberger. All right. So again, daily chart on the right or the left, 5-minute chart on the right. This is what we do to determine if we want a stock or we're ready to get rid of a stock. This is telling us when to do that. Okay, as far as timing it. So this chart tells me whether I want it or not. So I kind of like this on the pullback here to this level of support. RSI is positive and now it's rising. PMO's on a crossover buy. That's a little bit concerning, seeing stochastics top before reaching 80. But you can see that the stochastics are still above the signal line. So, I mean, only barely, but there's still a chance for a reversal here. I'm not thrilled with that look. This is a big problem. So first of all, the group is doing quite well. It's accelerated at its outperformance. This is the most important, remember, and Schlumberger is doing pretty well against the S&P itself. But notice it's not doing quite as well against its group. That tells me there might be better choices in this industry group compared to Schlumberger, just because we're in a declining trend against the group. But again, this is the most important right here. So we'll go with that. So I think it's interesting on the pullback, and a lot of the indicators are set up pretty well. So let's look at it. If we're ready to buy it, what our timing will tell us here. So as far as today goes, so here was a sell point right there where the PMO turned over. That would have gotten you out here. Here was an entry. There's your positive PMO crossover with a positive RSI. That's your entry here. We got another sell point, came in right about here. So that buy to that sell would have been, negligible. We probably would have basically broken even on that. The next buy point came in here. So we have that PMO crossover, positive RSI. So that was your last buy point here. Sell point came here where you got the PMO turning over. That would have gotten you out over here. At this point, as far as entry tomorrow, I think the 5-minute chart is telling us that there is a little bit of weakness here under the surface as well, because we do see that PMO is turned over. It's about to give us a sell signal here. It's just 1/100th above its signal line right now. So what that tells me is tomorrow morning, probably not going to have a buy point. But you would want to keep an eye out, because eventually the PMO will turn over, and then that's when you're going to get that better entry. But right now, I wouldn't be looking for an entry just based on the PMO about ready to give us a negative crossover. All right, so that was Schlumberger. Next up here. All right, Rahinda, you gave me two others, so let's look at somebody else. If I have time, I'll go back. That's one of the issues I have in my free trading room is I get a lot of requests, and unfortunately, I can't cover them all. But that's where my DP Diamonds subscription comes in, because as part of your DP Diamonds, besides getting 10 plus stock picks per week, you also get a live trading room on Fridays at noon that is only for subscribers of Diamonds. So it's a really small room. And so therefore I get to everybody's symbol requests. And in addition, I do a thorough sector review. We look at the sector to watch for the following week. We look at the industry group to watch the following week. And if we have time, we also look at a few symbols within that industry group to watch for the next week. So you get really a lot of information on Fridays, and then you'll have all of that in your pocket and ready to go on Monday. So the Decision Point Diamond Mine is part of the DP Diamonds subscription if you're interested in getting even more of this. But my free trading room, you can get this real time just to see how it works. All right. So this isn't a group I'm not particularly thrilled with, or I should say sector. I mean, it's a failing sector right now. There are bright spots or pockets of strength, as we often say. But this one, I really don't like the setup here. We had this beautiful double bottom that set up. You can see right here, we got the breakout above that confirmation line, but look at what it was. It was on a big shooting star. That means you have this tall wick at the top of your candlestick. Well, what is that actually telling you? That's telling you that it got all the way up here intraday, but the bears pulled it back down and ended up closing very close to the lows of the day. So it's also a filled black candle. So it even closed below the open that day. So there were a lot of signals here that this was not going to be, that this double bottom was not going to work out. And sure enough, we got the pullback. We're now below all of these key moving averages. The next level of support isn't until about 450. So I wouldn't be interested in this. RSI is negative. PMO is topping, which is a problem, but it's also doing that below the zero line. So that's especially bearish to me. Stochastics have just moved into negative territory. So this wouldn't be on my list for a buy, but let's go over here and look at that 5-minute. Now, this brings up a good point here. So we have a lot, the trading here is kind of fits and starts because it's a low volume stock. So you can still get the information down here, but I think if you really want to see what price is doing, sometimes it does help to get to a 15 or 30-minute chart. We'll talk about that shortly. So here is your aggressive buy point right here, because you've got the PMO crossover, but you have a very negative RSI. So you could have gotten in there. And it would have been pretty useful. If you were waiting conservatively to get in, it would have been right here when that RSI got positive. So in this case, you didn't miss a whole lot of upside there, but it did get you in at a better point. You didn't end up having to deal with a little bit of this pullback, but it's moving back up. The PMO is rising. Everything looks good. The RSI just got a little overbought. And so now we're seeing a bit of a pullback here. But on the 5-minute, you only ended up with a buy point, and that came in aggressively there. Boop, boop, boop. There's your positive RSI. And so that would be your conservative buy point right there for this one. But I have to say, I'm not really too thrilled with the look. Let's look at uranium. This one's getting a lot of interest, as a lot of rare earth materials are right now. Due to the war currently going on. Okay, so notice we're not going to have the relative strength data because this is, an ETF. It's not going to be lined up with an industry, but you can see that it has been outperforming the S&P. So that's a good start. Let's see, get that off of here. All right, so RSI is positive, but it's just hit overbought territory. That could be a bit of a problem. But we also can see back here that when this one's in a nice rally, it can hold overbought conditions for a while. And you'll find that with a lot of stocks in a bull market that are doing well on rising trends, that a lot of times they can hold those overbought conditions. I mean, just look at a crude oil chart right now, and you'll see that that's can be the case. Even XLE, I believe, has had a lot of overbought conditions, but still doing pretty well. PMO is on the buy signal. It's now above 0 and it's not overbought. So all of that looks good. We can see that it hasn't quite broken above this area of overhead resistance. You can make a case for a kind of a messy double bottom going on here. We need the breakout to confirm it if that's indeed what we have. But I think this looks good. I would kind of like to see it break above overhead resistance. But knowing what we do about uranium, also seeing the internal strength here on that stochastics there, and then look at the volume coming in here on this rally, huge volume. Now, like I said, I like to see the OBV making new highs with price, but when we look back here, there's where we were with the OBV, and now we're well above that level. And that sets up what I call a reverse divergence. So yeah, the volume's coming in and all of that, but you really want to see if the OBV is going to break above its last high, you really want to see price doing the same thing. Otherwise, price isn't truly following volume, and when that happens, usually there's problems under the surface. But right now, I think this looks pretty good. I think that that's kind of a interesting to know back pocket, but it wouldn't prevent me from getting into uranium. It looks really good. I'd like to see it break out a bit more here, but I can see an entry here, especially knowing what we do. So let's look here. Looks like we had a sell point come in early. That would have gotten you out right around there. The conservative buy came in here with that crossover of the PMO. That would get you in here. So the last buy point is at 26.24. Currently price is at 26.39. So it's a bit above that last buy point. The PMO now got really flat. So you can use those crossovers, but really what it's telling you when the PMO goes flat is that there is either no acceleration or the acceleration is very, very steady. No need to push your foot down on the gas, no need to pull your foot off the gas. So that's why it's just flat. We're just cruising sideways right now. So the buy point was right in there. If you could get a price point, that would be great. I would see 26.60 as a possible breakout and a good buy point coming in there. This one does look ripe for a buy starting in the morning. All right, Netflix. Yeah, let's look at a FANG stock here. Now, Netflix is raising its rates. I mean, it's negligible, but it's still, people don't like that. But they have to pass it on to some people, although they're getting a lot more involved in, their own programming, which costs money. Forgive me, gotta drink some water. Okay, so this one's in a big bear market, right? I mean, we don't even need to measure, but I'll measure it for you. Officially, a bear market is a 20% decline, and we're at 50%. So Netflix is pretty cheap right now. It broke below this level of support. It is starting to come back up, but there's a lot of overhead resistance here. Things are looking up as far as stochastics, but on balance volume, I mean, it's confirming that downtrend right here. And the fact it can't get above the 20, not really interested here. The group itself is underperforming the market. Netflix is performing in line with the market. Normally that would be all right. But right now with the SPY and the S&P being in bear markets themselves, performing as well as them isn't a good thing. Netflix in comparison to its group is also trending lower here, you can see. So that's bad news. So I'm not one. I do like to buy reversals. My subscribers will tell you a lot of the stuff that I present in diamonds is stuff that I think is just now reversing. You know, I'm getting the PMO turning up. I'm getting all of my other indicators. So I like a reversal stock. Don't get me wrong. This one, I just don't think is ripe for it. I'm just going to take a peek at the weekly because I'm curious. So here is strong, what should have been strong support. It failed. Next level of strong support, that's semi-strong at these lows, that top. So we're kind of sitting on some support here, but this is your strongest support level right here at about 250. So I think it still is vulnerable to moving down to 250. And that's another 30%, believe it or not. Wow, it's hard to believe these stocks are beat down that much, but so anyway, I don't really want to own Netflix, but say I owned it, when would I want to sell it? Well, right here, we had a sell point with the PMO turning down. That would have gotten you out. Let's see, can we get that back? There we go. So there's your sell point right in there. So that would have been a pretty good one. Here's the buy point, was right here. And again, I wouldn't be buying this stock. This is really more for example. But that's when the RSI got positive. That's when we got the crossover. And that would have gotten you in right about at 357.50. We then had another sell point come in right about here. Another buy point came in right about here. You can just see it's not really, these entries and exits aren't particularly successful. And that really does tell you, I think, a lot about what's going on with this stock. Next sell point, you can see right back here where the PMO turned down, got you out about here. If you got to this chart late, this would have been a good area to sell before it dropped below, went into negative territory for the day. If I walked into this chart, like right now, I had it and I was ready to sell it, I would sell it right away because everything is still very negative on the chart. We more than likely are going to see price fall even further. So if I was a seller, I would be out. Okay, it looks like I have time for maybe one more. Let's look at, let's see here. What do the charts say about Bitcoin? Well, I do cover Bitcoin in the DP alert along with all of the others. So I prefer the PMO versus the PPO and MACD because we developed it at Decision Point. I helped with creating the formula, so kind of have preferential treatment. All right, I thought I had time, but it looks like we're getting a little low, so I want to cover some important information for you. So again, if you want to see this working live and in action, you can go and sign up for my free trading room. This is something free out there. Just click on my picture. You go to our homepage at decisionpoint.com. Just click on the picture. You can get registered. It's recurring, so you don't have to register for it every Monday. You get notice before it starts. It's pretty cool. And when you sign up, it also puts you on our free newsletter list. Don't worry, I only send the newsletter out once a week. So I'm not going to spam your email box if you are on our free newsletter list. If you sign up for the trading room, you'll get on the free newsletter list. If you don't want to be at the free trading room, go to my homepage. You can still sign up for that free newsletter. Like I said, once a week, really important stuff. But here's what everybody wants to hear. What is your special? I am bringing back my special from the holidays, my Cyber Monday holiday special, just for you guys. And this is huge. This got a lot of traction when I ran it during the holidays, but you can save 50% off your first month. But I'm also going to give you a full month free on top of that. So you'll get 2 months of Decision Point at more than half off if you really consider the fact that you only pay 50% and then also get that free month. All you have to do, I don't have a landing page. All you have to do is use that coupon code SAVE50. Now, when you do use this coupon code and you subscribe, it's going to tell you that your renewal date is the following month. Don't worry, I just have to go in manually. I'm going to add that month for you. If for some reason it doesn't end up in there, I am the customer service, so I will take care of that for you. Let's just go quickly. I'm going to show you my website so you can get a little bit of information about what I do there. And of course, the big question is, well, how much does this cost? My products are so reasonable. They are great for the beginner. It's great for the executive, especially the DP alert. I give you a very great rundown of what's happening in the market. I cover dollar, gold, oil, gold miners, yields, all of that in the DP alert. Great executive summary for folks. DP diamonds is where I give you those 10 stock picks. And then you also get that diamond mine trading room. Cost, look at this. It is very inexpensive. And when you consider that you're going to only pay half and then also get a free month, come on, you guys have to try out my service. If you want to get the bundle, it's $68, DP alerts $35, and decision point diamonds are $40. I'm contemplating raising the price on diamonds again, just because it takes a lot of my time. And I think that my subscribers do quite well with that. So there you go. My special again is save 50 for your coupon code, get 50% off your first month and get 1 month free. And then just a real quick, so you can see how it's lined up on here, the blogs and links page. So even if you're not a member, you can still come here and get my free stuff here. I've got tons of workshops. And we have the DP chart gallery on StockCharts.com, educational material. But here you have the DP alert right there. DP diamonds are in there. And then also, if you are a free person, the green will tell you if it's a free article or a free video that you can watch. So we don't do it a whole lot, but we do have those free articles out there too. So come on over to decisionpoint.com and check us out. Subscribe to the free newsletter, or you can register now here for the DP trading room that is free. And that's all I got today, David. So looks like there might be a few questions in the chat. So I'll go in there and see what I can do as far as answering those before I go.